investor.
Good morning, everyone, to Market Insights. I'm Sarah Touchstone, Landmark Title's social media marketing strategist. I am joined today with Scott Kiburz, ARMLS Specialist. Scott joins us to give us the facts, figures, stats in our ever-changing Phoenix metro market. So, Scott, I'm going to dive right in because, like you said, we have a lot of content to cover today, and thank you for joining us.
Thank you. Good morning, everybody. Let's get right to work. Sarah, let's do the fast facts, of course. What's happening right here, ladies and gentlemen, just in one quick slide. As of the first 7,213 active listings in all of Maricopa County. Please know, if you look deep into that slide, townhomes, condos have essentially, they're up just about 80% of where they were last month. They were in the 300s last month. They're 554 and 452 this month. Sold's holding steady at 71.94. Big swing, ladies and gentlemen. Yesterday, our absorption rate was down from 140% all the way down to 89.32%. It's still massively fast, and we're below 100%. We'll do more on that in a little bit. Coming soon, it normally runs between 650 and 770. It's up to 875. Things are happening there. Of course, interest rates have been rising due to inflation and the Fed raising the rate. So it's not uncommon on the low end right now at 4.8 up to 6.2% interest rate. People are talking about things like a buy down or an adjustable ARM rate again, things we haven't talked about in many years. Let's stop right there and just take the interest rate. Let's just say at 5.25 versus 3.25. Ladies and gentlemen, everybody on the line, the cost to own that home, if I have a $500,000 mortgage or a $200,000 mortgage or $1 million mortgage, with a 2% interest rate between 3.25 and 5.25, the cost of home ownership is up a whopping 25%. Your mortgage payment is up 25%, even though interest rates went up only 2%. That's just how impactful the low interest rates that we've been enjoying have as we move up to 5.25. And there's a phrase we've used for many years, and it goes like this: nobody wants to catch falling glass. And so are the interest rates going to bounce right back down in another 30, 90, 180 days? Are they not? Is inflation going to continue? Is the war going to continue? There are so many factors going on, but please know, just common sense approach, a 2% increase in interest rate at that low has a 25% impact on the mortgage. Our average sale price still $591,736, and actually that's down just about $200 from where we were last month. Sarah? Okay, so ladies and gentlemen, we've had this slide up for 4 or 5 months. Anybody new, or just to put an exclamation point, the biggest influences on real estate: the government, the economy, technology, and societal shifts. Ladies and gentlemen, I can't think of all 4 of those being more intense, more impactful than they are right now. And that causes fear, disruption, uncertainty in our market. And again, nobody wants to catch falling glass. So you, as a real estate agent representing buyers and sellers, it's just paramount to be able to look back and see what's happening last week, last month, last quarter, and anticipate what might be coming for our buyers and sellers. That's why we spend so much time on market stats, market conditions. Sarah? Boy, I just tried to add a little bit of humor. For those that know me, I'm not very funny, but ladies and gentlemen, this is Phoenix, Arizona, 1967. And if we go to the next slide, I wanted to point out one quick statement in here. Our average growth was 15,575. The last full sentence, annual increases were quite large, ranging from 10,000 to 20,000 people in 1958. Ladies and gentlemen, we are screaming ahead. And yet in the 60s, they defined that as a quite large growth. I just wanted to bring that to the energy. Sarah, as we jump ahead to the next slide and we look here in 2010 in the submarket, what I wanted to point out in the bottom left slide, the graph, note that homes were priced 100, 125, 175 to 500, and the demand was only 5% for homes over $500,000. Not that long ago in 2010. Sarah? As we look into 2020, 650 or more looks to me around 8%. And a portion of that 8% included new homes at 650 or more. And that's just a couple years ago. And so I just wanted to give a quick look back because our market has been escalating higher and higher at a ferocious rate. Sarah? So this is home sales at the national level. This is a NAR statistic that in April, we had 5.6 million units sold, median price 391. New housing starts in April, 1,724,000. And then new home sales, 763. We're still underbuilt by millions of homes nationally in terms of what the demand is. And please know, ladies and gentlemen, the millennials and beyond are wanting home ownership at a higher level, higher than they've ever been. And the millennial buying group right now is the biggest buying group of homes out there, just by a fraction of a % or two. Sarah? Ladies and gentlemen, I wanted to include this slide here, looking at coaching listing agents and understanding buyers and sellers, that this is like the asking price. If we're at market, about 60% of the people who want to see the property will. If it's 10% above, only about 30%. If it's 10% below, 75% of the people will see that. And if it's 15 below, 90% of the people will see that. And so I just want to give this information out to agents in the sense that if they have a seller who's overconfident and wants to price their house above market and find that person that will reach, that buying pool is about 10% of all buyers. And as interest rates ascend and there's just energy around, hey, not sure I want to do that right now. Let's just see if things settle in the next 30, 60, 90, 120 days. That's really not a great strategy. Always pricing the house at market is just the best common sense approach of doing things. And right now, it's not a bad idea to include a price reduction conversation upfront with your sellers. If you're not getting a contract in 2 weeks, 3 weeks, that there is an automatic scheduled price reduction. Us as agents, we don't set the market, we interpret the market. And if there is a downturn or truly a leveling off, which we're seeing now, and a possible future downturn, we want to be ready for that and not get caught holding on to something too long. Sarah? Okay, Michelle, for you out there, this is one graph that comes from CoreLogic, and it disturbs me a little bit. If you can hover over the dark red in Arizona, that is Yavapai County. And for whatever reason, that is the brightest red, very high price reduction. Anticipated, like they're thinking a 70% chance of a price dip in that county. Right below that, Maricopa County's dark blue-green, and they're saying that's a very low % chance of a price reduction, 0 to 20% chance. So Sarah, if you can comment in the chat box as we go forward. I know there's a water issue there. I know there's a couple other indicators going on there, but if you had insight for the whole group to benefit, to know why would anybody anticipate a price drop in Prescott Valley at a very high level? Sarah? Okay, we're going to spend a little bit of time here, ladies and gentlemen, and then we'll get into a little bit of a dive into Phoenix, and then we'll have a series of slides for all the various cities. Okay, so out of the gate, across the top line, where it says May, that's essentially June 1st. This is all of Arizona Regional MLS. If you have a home in the White Mountains or Flagstaff or Tucson, and it's in the Arizona Regional MLS, we went from 6640 up to 9442. Now, that is everything in the MLS. Again, we're the biggest MLS in the state. We're the number 5 or 6 in the nation in terms of size and subscribers. And so people want the exposure they're going to get from the Arizona Regional MLS. And that's everything. When you go to the next line, total actives in Maricopa County, 7194, you can see the delta there. So it's about 2,300, 2,250 additional homes that are not in Maricopa County that are in the MLS. As you slide down, I want you to take a look at total townhome and condo. You're looking at April at 388 and 292 for condo, and that almost doubled. Certainly went up 150 some doors to 554 and 451. Okay, pause, ladies and gentlemen. If you stopped and jumped off this call right now, if you look at total under contract, last month, this time, we were at 7793. Total UCB yesterday, 2701. Drop the mic, ladies and gentlemen, that is a downturn. Total under contract with backup. So people are stepping away from, I have a home that's contingent on me selling this to buy the next. That is a big movement in a contingency buyer is going to be less successful, or it's going to have a tendency to be less accepted right now, because if I'm contingent on you buying my home, and Sarah, you have to sell your home to do that, I don't know what that market's going to look like, and I'm going to be less likely to accept your offer to buy mine if you still have to sell yours. That is a big swing, ladies and gentlemen. Coming soon has risen by about 150 doors to 877. The pending, the total sold Maricopa County have been running pretty nicely the last 60 days. We'll watch these in the future. Biggest noteworthy piece on this graph, total UCB down by more than 50%. Sarah? Okay, so this was yesterday, ladies and gentlemen. We had 7,099 active listings, sold 6,341, and under contract 8,390. Ladies and gentlemen, on this graph, what I watch hard is the bottom left linear graph, dotted graph of the sold to list ratio. And notice how that's trending down, closer approaching 100%. And then also looking at the bottom right graph is showing the average sale price, median sale price month to month. Ladies and gentlemen, I look at this same report today, and the red and blue dotted lines tracking both hit 100% this morning. They dropped tremendously in just one more day. So we're going to watch that just in case the list price to sell price drops below 100%. We're gonna see some negotiation happen on behalf of the seller, some concessions, some willingness to repair some things they might not have had to repair in the last few months. This is where we're going to watch that trend. Sarah? Okay, big drop the mic as well. We're under 100% absorption rate. For the first time, the middle of the graph, you see June of 20. Ladies and gentlemen, we've been running over 100% for almost a little over a year right now. I'm sorry, 2 years right now. And we got used to that. We kind of that was the market of the moment. We were great at helping the buyers and the strategy and contingency buyers and sellers, and we just got used to the market of the moment. I guarantee you 95% of the United States didn't live through 2 years of what we just experienced. And so when you look at the far red line and the blue dot, they're basically 1.2 months of inventory and essentially 90% absorption rate. There's people who think the sky is falling. 1 month of inventory is the sky is not falling. We're nowhere near a normal market. It's still an extreme seller's market, but that is a shift that we're seeing for the first time in 2 years. And that causes some uncomfortableness, some uncertainty. And where will this land? Will it continue at this level, or will it bounce right back here in the next few days or months? Sarah? Okay. This graph here looks at supply and demand. I don't always include this graph, but this is an important one. And what I did is I wanted to go down to month supply and absorption rate. So Sarah, I took this graph and I blew it up for the next slide. If you'll go ahead for me, go to the next slide. I'm looking at the bottom of the 3 quadrants. Go ahead, Sarah. Okay, so I just blew that up and made it even bigger. What I wanted to point out is looking on the month of supply absorption rate, the black and the blue line crossing over as of May of 2020. And then they just about met yesterday. And that's the absorption rate and month of supply. We have basically 1 month of supply and absorption rate in the 89 approaching 100% rate. And so, ladies and gentlemen, that's a crossover. And that's adjusting for seasonality, supply and demand. We haven't seen that for almost 2 years. So it's important to point out the market is shifting, and that specific graph is illustrating exactly that. We are so much more used to having 3-4 months of supply and absorption rate in the 30 to 50% in our market. Sarah? Okay, so here's all of Maricopa County. And again, this is a look back as of yesterday, and it's aggregating what the prices were this time a year ago. And so please know, across the board in the blue circle, our listings are up 88%. Our solds are down 17. The big one on this slide is in yellow. The median sale price per square foot is up 25% from where it was a year ago this month, not January to January, a year ago this month. And across the board, it's at $290 a square foot, all Maricopa County aggregated together. There's only 70 days on market. And in this graph here, 1.12 months of supply. We haven't been above 1 month supply again since May of 20. It almost feels like we have some breathing room, some chance to relax, some choice. Oh my God, if we could preview a house, what a joy that would be. Sarah? So as we get into those disc numbers, those 4 blue or the 4 dots, this is what the numbers breakdown look numerically. So if you go to that center sales transaction type black, green, and red, ladies and gentlemen, we were running somewhere around 15 to 16% of our homes were being flipped in the green. That's dipped down to 10%. Ladies and gentlemen, if prices do dip, and we know that all of our costs are surging, and we're doing a fix and flip, we do not want to get caught with a high burn rate or high carrying cost. We have to carry that house 2 or 3 months because it just hasn't sold, or lower our price. That fix and flip market is just less profitable. And so quickly our market is already shrunk by about 5% overall. Our normal sales are at 87%. That's a beautiful market. On the top row of the numerics, the sold listing 6341. That's down 11% from last month, but that's not bad. The part I want to point out to everybody, ladies and gentlemen, is line 2, new listings 9814. The gap between solds and new listings is at a record high in the last 2 years. We grew by 2,400 more homes were added than what we sold. And so if this continues at this current clip, we'll be climbing out of a 1 month inventory, potentially get to a 1.5 to 2 to 3 months of inventory in the next 30, 60, 90 days. We'll see where that lands. But that is the biggest gap we've had in a long time, that we're actually listing more homes than we are selling. Sarah? Okay, so here is the listing count, average cost per square foot, median cost per square foot. What I wanted to point out here is the green bar, the vertical bar, is approaching 7,500 doors. That's the most we've had in a long time. And if there's going to be any kind of leveling, we're going to watch that black and red linear line go. There is a pretty good gap right now. It's between say 360 and probably 340, 330 probably. We're going to watch to see if those level off. In the bottom gray, the total number of listings here, average cost per square foot median, and this is the active listing price. And what we're doing is looking back just 30 days and 60 days. And note that currently all properties aggregated together at 351.66. That's still up a couple dollars, $2 or $3 from where it was 30 days ago. And the median price is at 304, and that's up about $9 a square foot. We're going to watch that very, very closely. If we go to the next slide, Sarah, we hear a little bit more of a story, but this is the under contract. So I can list whatever, but if I'm selling over list or at list, or if we start to sell below list. So please look here. Average dollars per square foot at 312. 30 days ago, it was 315. That's about a $3 lower price point than we were 30 days ago. And please know the median sale price, 286, down from 288. So that's down another $1, $2, give or take. This is the first time we've seen this type of change in a long time. And so this under contract is the best thing we have right now to a future cast of where the market is heading. So this would definitely indicate a leveling, if not a slight decline. If you had a sine wave of ascending, leveling, and declining, this is definitely a leveling with a slight decline, just off peak. And that illustrates that with the black and the red graphic, that little bend down is the first time we've seen that in a long time. Sarah? Okay, so this is active listings breakdown, and this is by the type of home, single family, townhome, and manufactured home. And then as a percent, what it is. So again, 81% of our homes are single family, 15% townhome condo, and just 3.5% manufactured home. But the manufactured home has definitely showed up in our marketplace as an alternative for somebody who wants to live in an area, and all of a sudden I need to have a little space, and a condo just won't work due to an animal that I might have, a dog or a cat. I need to have some outside time. That a manufactured home becomes an opportunity or an option for people. Sarah? Did I put the same? There it is. That's what I'm looking for. Okay, so under contract, same type of thing here. I want to go straight down to the bottom gray dwelling type, median sale dollar per square foot. Again, single family, looking at 284.88 down from 287. The townhome condos are at 303 versus 304. Manufactured homes, 178 down from 179. If you go back just a month ago or 90 days ago, manufactured homes averaged 190. So that's the most significant drop. And ladies and gentlemen in the audience today, what we frequently talk about is single family homes, in my humble opinion, is the bellwether. They're the first to go up. Then townhomes, then condos, then manufactured homes. Manufactured homes are the last to go up. When they do come up and they start to come down, they're the first to come down. And we're seeing evidence of that right now as we're talking, that they peaked at $190 a square foot to $179 last month. And they started out the gate this month just about $1.70 less than they were this time last month. Good information to watch and trend. And just in case that has an impact on condos, townhomes, and single family homes moving forward. Sarah, I'm talking as fast as I can. I know the time flies, but let's keep going at this pace. If you'll go to the next slide, please. Okay, I wanted to give a visual on this one here. So if you look at the green and black line, how they essentially converged, and they peaked in April at about 102.5, and they're currently at 102, but they're down just ever so slightly as a trend. Ladies and gentlemen, if this continues what I saw this morning, that trend line will drop to 100% by the end of the month in terms of sell to list price. We're going to watch that closely. I wanted to give a visual on that. It's just coming off peak in the last 60 days. Sarah? And then, ladies and gentlemen, here, this is has to do with cumulative days on market. So our market in the grand scheme of things is still moving very quickly. From this year and average and the median cumulative days on market. So we really haven't changed much there. But if all of a sudden we see we're going to a 60-day average sales date, we'll be trending that and watching that closely for everybody on this call and it receives this information. Sarah? And then last but not least, we're getting into some sold information. And again, sold to list and sold to original price point. So we're still, as things close, we're looking back, what went under contract 10 days ago, 20, 30, 45 days ago, they were selling, essentially over 100%. As we look this time next month and the next month, we're going to see if that gets closer to 100% versus 102, 101. Sarah? Big point here in the top gray, month of supply, almost 3/4 away across the top. Please look at that May of 2022. We, for the first time in years, we're at 1.12 months of supply. Holy cow. Don't know what to do with all that extra inventory. Sarah? Okay, there's a couple quick graphs here I want to give some visuals on. So the number of active listings, we're at 7,099. Ladies and gentlemen, that's pretty much on par for where we are this time of year. We haven't seen this high number, obviously, since October of 2020, September of 2020. But we're climbing out and at least have more listings to share with our buyers and taking some of that buyer fatigue away from our buyer folks. Sarah? This one here under contract, not out of range at all, 10,000 plus. That's a good slide. Sarah? What I wanted to spend a minute on here is closed. Our closed were down a little bit in May, probably a little bit more than what we're used to. But again, there's a lot of the four indicators from government, societal, technology happening. So there's some uncertainty there. So there's some pause. And again, if we add 2% to our normal interest rate, if I am getting a mortgage on a home, that adds about 25% cost of ownership of that home. And so if you're a buyer agent and you're working with somebody and they got pre-qualified 30, 60, 90 days ago, man, it wouldn't be a bad idea to have them requalified with today's interest rate. And a buy down or some kind of leverage for them might be an option to keep them with the capacity to buy a home. Sarah? Okay, of all the slides, this is the one of the set of 4 that's important to show. We have added 11,501 new listings last month. That is the single biggest number we've had since this graph goes back 2 years. People are wanting to take some of their profit off the table, move for whatever reason. We haven't seen this number of new active listings in a long time. That trend is up and that trend is the highest it's been in 2 years. Sarah? Here we go with cancel listing. I got a canceled and expired. So this is truly a canceled number of listings. And we're at 855. And that looks, if you just look to the far right of the graph, that looks like a high number. But if you go back, it's kind of a seasonality thing that we're at that point. We peaked in July last year at August at 895. And if you go back to September of 2020, we're at 860. And July of 2020, we were in the 875 range as well. So there's a little bit of seasonality there, but this is truly a canceled listing. Sarah? This one here is the expired, same version of that. And we're only at 240. This is for all of Maricopa County. And I just wanted to let people know, like, this number hasn't shot up to thousands or anything like that. We're leveled off at 240, and that's not out of its normal range. If the market was truly falling, we would see a lot more people come in and cancel by the hundreds and hundreds more than we are now. This seems to be a very even keel, steady, certain market. Sarah? Okay, Ladies and gentlemen, we're at time already, but what I wanted you to know that from this slide to the last slide, we are going through the alphabet of what's happening. If we just stay on this slide for a minute, Sarah, I just want to make some commentary. Ladies and gentlemen, think of the communities where new home construction is happening. Santan, Maricopa County, or Town of Maricopa, Tonopah, some in Chandler, Goodyear, Avondale, Peoria, any of those areas where new home construction is happening, the number of in blue active listings could be 100, 200% increase. On average, all of Maricopa counties up 25%. For those who work the Northeast Valley of Metro Phoenix, the Rio Verde Valley, we're hearing this piece. I think we shared it last month as well, that Scottsdale has passed legislation where they're not going to sell hauled water outside of the city of Scottsdale. And there's some wells that are underperforming or not performing in Rio Verde, and that they began to become dependent on hauled water. And the closest city for that is Scottsdale. Scottsdale's passed legislation to halt that effective January 1 of next year. And so, Sarah, if you kind of rapidly go down into Rio Verde, I just wanted to make a comment on that one city, and then we'll close it down for today. You guys have been a great audience. It's always a pleasure to do work with Landmark Title. They always do a steady job for people. Let's stop right here. Ladies and gentlemen, active listings here are down 4%, but without a doubt, the lowest median price per square foot increase, up 16%, not 25. This is the lowest of the major cities in our metro. And $340 a square foot is a premium, yet that's a bargain compared to Scottsdale. But it's shut down, and the month supply has gone up from just under a month to 1.6 months, and days on market are way down, just 14 compared to 48 this time a year ago. But they have seen a leveling in their market more so than anybody else I've seen in our metro, and I wanted to make comment of that. So that's where we'll end right for today, just due to time, but all the other cities are in play there. And it's always a pleasure to work with you, Sarah, and the team. I'm going to give the controls back to you, and we'll close this down. Okay.
Hey, Scott, do we have a second to go over Scottsdale?
Oh, we can, absolutely. So Scottsdale, active listings are at 45%, of course, median sale price almost 30% above average. And again, this is a very affluent zip code in our metro compared to Paradise Valley. It'd be one of the hardest to pull up, and yet it's up almost 30%. A month supply 1.425. What we're looking at in cities like Scottsdale and parts of Glendale and Peoria, where there's a lot of spring training and things like that, there's more and more investors coming into play where they're no longer looking at the home as this is a home I'm going to live in or a home I'm going to rent. They're looking hard at a VRBO, Airbnb rental home. And the numerics for that are completely different. Usually I don't want to say double, but they're approaching double the monthly income for a property that they can Airbnb or VRBO. I know there was a listing in Arrowhead Lakes, one of my agents had, and I would say of the 20 some that came through in one day, 7 of them were looking at that home not as a rental home or a second home, as an investment property for an Airbnb VRBO. And the numerics on that caused the home to go up. Scottsdale would have a lot of Airbnb VRBO homes as well, along with, ladies and gentlemen, let's be candid. We got the Super Bowl coming next year. 90% of the activities happen in Scottsdale, 10% are in Glendale with the game itself. But our whole metro is going to be publicized to the whole world of what it's like to live in Maricopa County early next year. Between the Super Bowl, the TPC, Barrett Jackson, it's going to be a global focus on our metro. Scottsdale's probably our most international city, and thus it's receiving the accolades that it's getting. Sarah, hope that was helpful.
I think that was great, Scott.
Beautiful, beautiful. Sarah, always a pleasure to do this for your peeps, and the market's moving. We're going to be watching this almost daily, and it's just moving fast.
Scott, we got one more request for the Phoenix slide.
Okay.
You've got a few more minutes. I know we had a lot of information today.
Okay, so Phoenix is right in line with the rest of the average for Maricopa County. Active listings are up 79% versus 85. Median sale price are up 26.4 versus 25. 299, that seems like a bargain in Phoenix. Our supply 1 month, 1.12 months of supply. If you go to the next slide, Sarah, I put a background on here as well. So again, all of Maricopa County was flipping at about 10%. Phoenix is flipping at about 13.29. That's in green. Sold listings 1625, but new listings are at 2568. And actives are at 1815. Ladies and gentlemen, we're somewhere around 1.8 million in Phoenix Metro. That's not a lot of inventory for as big as our city is. But we did tip over 1 month supply for the first time since May of 20. Yeah, May of 20. And so Phoenix is illustrated right in along with the Maricopa County average. And given a choice, it's got, center field of the city, access to all the sports, the airport, the biggest services, the light rail. It just gives us the most living opportunity, lifestyle living opportunity of any one city. Sarah, I hope that was helpful for everybody.
Yes, yes. And all these slides too, guys, these will be available. I'm going to send them over to our business development managers. So if you're not already working with one, please reach out. You can reach out to myself or like I said, anybody at Landmark, and we'll get you guys hooked up, and we'll have these slides available for you to use and leverage and stay informed with your clients. So we're going to wrap it up today. Thank you, Scott. That was awesome. A lot of good information. We are shifting, guys. This is going to be a very interesting year for us. And of course, thank you to Landmark Title for allowing us to bring you market insights on the first Thursday of the month. We also, quick reminder, have 7 offices here in the Valley to service you, as well as one up in Prescott. Thank you to everybody that was on today, and we'll see you next month.
Thanks. Bye, everybody.